Well, what's happening out there in condo land? Seeing some big moves in the market. To help break it all down, a real pleasure to welcome back on Hub Hits Ron Butler, the founder of Butler Mortgage. Ron, great to be in conversation with you.
Great to be back.
So, what are we seeing, Ron? Is this a tale of two cities? Is there anything to hope here in terms of, yes, a story of a big shakeout in certain parts of the condo market in Canada? Is there any light out there? Are the clouds parting over any one of the major metropolises in Canada at this moment?
Well, no, not really. I mean, just to be honest, it's not really any great news. In a general way, for buyers, there is an uptick in activity in September for sure in purchasing of property, mostly low-rise homes. Not as there's condos being sold for sure, but they're being sold at much lower prices than they were a year ago. And there's still a huge number of listings. We have seen some odd things, though. We have seen huge chunks of condos that were left over from a condo closing. So just to briefly describe it, if you built a condo 5.5 years ago and you got people to close on it this year, you generally ended up with about between 15 and 25% of the people refused to close, depending on the building. And so you ended up with a bunch of suites there. And then you also probably had held on to some condos when you originally started to sell through the building. You held on to like maybe 10% of your inventory or 15% of your inventory and said, okay, we're going to hold on to these for 5 years. They're going to be worth a lot more then, and we're going to make a lot more money. Of course, the opposite is true. So what we're discovering is a bunch of these sort of leftover condos are being sold in bulk. They're being sold out in bulk to financial corporations to hold them as rentals for the time being, with the belief that sometime soon, like a year, 2 years, 3 years, the condo market will be resurgent and they will make a lot of money selling those places. So this was something that happened in 2008 and 2009 in the United States and California, Nevada, and some other states and Arizona. Prices went off a cliff and people like, well, Berkshire Hathaway, Charlie Munger, when he was still alive there, he bought thousands and thousands and thousands of properties at 60 cents on the dollar and sold them all off later after he rented them. So this is not unusual for big financial companies to jump in and buy things in bulk.
Is that helping, Ron, either mask price declines? Because I assume these are kind of private sales. Is it, and it's clearly taking supply off the market. Could this be the way that the bubble is, let's say, deflated, at least from this point going forward, with less pop and more, I don't know, of a high-pitched whine?
Well, it's avoidance of serious economic and financial consequences, serious financial consequences for the developer. I mean, when they're selling these places off, they're selling these units off as in bulk, let's say 40, 50, 60 units at a crack, at a severe discount, basically at about their cost, or maybe a tiny bit less. Because let's face it, they made money off the people who closed, which is the bulk of the buyers. So it's kind of it's a distressed sale for sure, but it also puts the developer into a sort of a breathable financial position.
Right.
It doesn't have really any impact on the market price because nobody really knows what's paid. It's a completely private transaction, not MLS. It's all NDAs, secrets, what the prices were paid. And so it doesn't really affect market prices at all. What affects market prices is more and more inventory of new condos completing and more purpose-built rentals towers completing, and that over the next 18 to 24 months, that just should keep driving prices down.
Yeah, so let's talk a little bit about that and the dynamics between falling rents and falling condo prices in the future. Is that a part of the problem here, Ron, that this particular asset faces now? Is that with more supply coming onto the market and not just units for sale, but as you said, rental stock coming online in big numbers, what does downward pressure on rents foretell about, future prices 12, 18 months out?
It's only bad news. I mean, it is only bad news. Like, let's face it, almost all of these condos that are going to be completing, both here and in Vancouver, or even on the outskirts, I mean, Niagara. There's some Hamilton condos that are going to be completing. Um, it's all bad news because they're all bought almost exclusively as investments. There's only, I'd say, 75% of all of them were bought by investors, people who are going to be landlords or people who hope to flip. Well, there's no flipping, so they've got to rent them out if they can close. And that's all in the face of a growing cohort of finished purpose-built rentals. Purpose-built rentals are on a boom. There's more rental towers being built in Toronto today than there has been since the 1970s. I mean, like, it's that big a difference. And in some parts of Canada, for instance, in Kelowna, in 2 years, they will add 35% to existing rental stock. In
Wow.
other words, just pull a number out. Let's say existing rental stock was 10,000. They're going to increase it to 13,500 in just 2 years. I mean, these are big, big increases.
And Ron, is this because buildings that were being built for sale are being converted kind of midstream to rental? What's going on here? I mean, I didn't think we were building all kinds of rental stock the last decade.
Well, starting 7 years ago, we started,
Okay.
and it's a great question because you are correct. Several, multiple projects in all across Canada when the condo market died about 2 years ago, 18 months ago. A number of units that were approved as condos decided to convert to purpose-built rentals and got support there from the cities to change the zoning. However, but we have had this great rush of purpose-built rentals for the last 7 years, and that's all about CMHC. CMHC developed a terrific program because they realized there hadn't been enough rentals built in Canada. So they put together a terrific program that has been steadily increasing in use for the last 7 years. Started small, builders liked it. The REITs liked it, the pension plans liked it when the buildings were complete, and it's just been growing constantly. And to your point, the sort of failure of the condo market had several developers flip from condo to purpose-built rental. So it's just grown and grown and grown, and we're seeing the results now.
So, Ron, what does that mean, though, for these remaining condo units that are coming onto the market? Because if suddenly we've got a surge of rental, and hey, that's great, we need more rental housing, but what does that do to the ability, I guess, of any future owner of that condo to generate a revenue stream that's going to justify, a square foot cost? It would seem that it's a kind of catch-22 here. We're building all this rental, and that's good again, but it's going to compound, I would assume. It could make the correction in the remaining condo units, numbering what, Ron, in the thousands upon thousands in Vancouver, Toronto, and elsewhere, come under increasing price pressure because you just can't, at least for that investor group, you just can't see that investment through to covering costs, covering property taxes, covering condo fees, covering, your taxes on what is in a sense rental income, which, compared to capital gains, it has a pretty brutal income tax treatment for you at the end of each year.
Well, to your point, there's absolutely no condominium, newly built condominium that's closed in the last 18 months that when it was rented out didn't lose money for the owner. They all lose money, every single one of them. Every single one that will complete in the next 18 months will continue to lose money for all those owners. No one's ever come to me and said, yeah, I just finished my, we're going to be a great positive cash flow on this unit when we move, when it's finished. It'd be great. Not once, never. That does not exist. It's not going to exist. So yes, to your point, every single one of these condos loses money if they're mortgaged. Yeah, I imagine if you bought them for cash, you're fine. But if you bought them for cash, it's one of the worst investments you could imagine. You're only making about 2% return. So it's just awful. But virtually no one buys them for cash. So the answer to your question is yes, emphatically yes. Everybody will lose money, continue to lose money, and continue to be disappointed by what's happening in the condo market, not just now, but in the future.
So just to take that line and extend it into the future. So we're going to have pressure on rents because we got a lot of rental stock coming online, plus I assume we've got a lot of these condos coming in line. What owners have been able to close are going to be desperate to rent. Do you have a sense, Ron, of like the delta between what the square foot price is now in the market versus what, let's say, rental incomes could actually support in terms of a cash flow stream that would be positive at the end of the day? Like, how much are we going to have to close here to get the price on a square foot basis of new build that's coming up to be sold or occupied by that previous buyer who did the pre-sale versus what kind of income they're going to get out of there? Because I assume that's going to be a big determinant of that square footage price for the new stock coming online.
Yeah, it's very important. It's the most clear indicator that we're nowhere near getting to a point where the numbers work is that there's absolutely no starts of new condos, no contemplation of it. You'll see sometimes people put out a picture, hey, we're going to build this beautiful complex. Nothing ever happens. There's literally been no backhoe on the ground to start a condo in Ontario for, I don't know, like a year and a half, 2 years. But to your point, the correct pricing today that we see people assume may work is just construction costs and no profits at all, no uplift. And if your construction costs are too high, they don't work. Like, I've had a lot of people show me that they believe $650 a foot is the minimum to break even today, and there's virtually nothing being sold for $650 a square foot. So there's a long way to go yet. But, hope springs eternal. Like I said, these people, these financial organizations are buying up in bulk 40, 50, 60 units at a time. And we'll see what happens. I have no belief that anybody will start making money on buying a rental condo in the immediate future. I just don't believe it.
So just to end on this, because this is really interesting information. So if it's like $650 to break even on the build, but let's say hypothetically in downtown Toronto, I don't know what the average square foot costs, but it's certainly of new content coming onto the market. It's certainly probably more than $650. People are trying to ask for that. And then you've got the pressure of the rents, pulling on that, whatever the future income stream of that condo, that asset would be. Where do you think all these lines kind of converge? Or, is it below 650? Like, are we in a trap here where inflation has raised the costs of construction to a point where affordability doesn't work, regardless of whatever profitability the developer may wish to have in some parallel universe that isn't Toronto or Vancouver right now?
Well, the key problem right now, particularly in Southern Ontario, is municipalities, cities and towns charging development fees, taxes, levies. It's about 28% of the cost of. So when we look at that 650 number, and we see that a lot of people are thinking, well, it costs 800 plus to build, maybe up to 1,000 in a great location with expensive land. Well, a big chunk of that, if it's $1,000 a foot, 280 of it is going to the city. I mean, it's nuts. It's just nuts. I mean, if we flip back 35 years, it was $3,500 went to the city, or $2,700 went to the city. So it's like we have to lay the problem at the feet of who's caused the problem. Now, as far as other construction costs are concerned, they will come down as trades become unemployed. They will start to rethink what they need to be paid. As if we ever got the industrial carbon tax off of concrete, we'd see an improvement there for building condos and purpose-built rentals. Concrete's the major building material. So there's all kinds of ways for it to become more reasonable. But right now we're stuck. We're stuck building projects that have got a locked-in cost component, which is probably more like 800, 850, 900, 950 a foot. Again, a lot of that going to the government. So you can make money in Toronto at 650 a foot. You will make money. You will be able to have positive cash flow on your rent, but there is no such number that can be built in Ontario or British Columbia today.
Wow. Ron, always fantastic to get a sense of the fine detail in this, something we all knew was going to happen, the popping of a bubble, but to look at it frame by frame with you, with all the expertise and insights that you bring to it, it's a pleasure indeed. Thank you so much for coming on Hub Hits.
Appreciate it. Thanks for having me.
That was Ron Butler, the founder of Butler Mortgage, also the host of an amazing podcast. Check it out, The Angry Mortgage Broker. Ron is a regular guest here on Hub Hits, giving his analysis of the real estate sector and all things economics. Check out Ron's other videos on our podcast and YouTube channel. You can do that right now, wherever you get your audio, and of course, over at youtube.com. Until next time, I'm Rudyard Griffiths. Bye-bye. This video has been brought to you by Airbnb. A big thank you to Airbnb for sponsoring the Hub's YouTube channel this month. It's great to be the beneficiaries of their support. Here at the Hub, we talk a lot about the housing crisis ongoing in the country. As we know, there are people out there that think that short-term rentals are to blame for taking supply off the market, but here at the Hub, we can feel that that doesn't make sense. Consider for a moment that the median number of nights an Airbnb is hosting someone in Canada as a guest is 55. These, frankly, aren't full-time rental properties. They are Canadians trying to get by like the rest of us by finding some additional income through renting out a property they own. Government data supports this. Statistics Canada recently reported the amount of Airbnbs that could actually be converted into long-term homes accounts for only 0.6% of Canada's housing stock. Canada needs solutions to tackle the whole housing market, not just 0.6% of it. We agree. Learn more at airbnb.ca/closer look.